Asian Paints, India's most powerful paint company. Buy, hold, or avoid. Imagine a company that has painted millions of Indian homes for more than 80 years. A company that survived wars, recessions, inflation, and intense competition. A company that turned a simple product like a paint into one of India's strongest brands. That company is Asian Paints. But today, investors are asking, is Asian Paints still a great investment? Why has the stock underperformed recently? Can it continue compounding wealth? Is valuation attractive now? Let's analyze the business, competition, growth opportunities, risk, and valuation. Company overview. Asian Paints was founded in 1942. Today, it is India's largest paint company and one of the largest paint manufacturers in the world. Business segments are: first, decorative paints include interior paints, exterior paints, waterproofing, wood finishes. Second, industrial paints include automotive coatings, industrial coatings. Third, home decor, kitchen solutions, bath fittings, lighting, wallpapers. Paint contributes most of the profit. Why Asian Paints became so successful? Strong brand. When people think about paint in India, Asian Paints is usually the first name that comes to mind. Its advertising has created massive brand recall. A homeowner paints a house once every 5 to 7 years. When that moment arrives, trust matters more than price. This gives Asian Paints pricing power. Massive distribution network. Asian Paints has one of the strongest dealer network in India. Thousands of dealers stock Asian Paints product. If a customer asks for a paint, dealer naturally recommend brands they trust and regularly stock. This creates a powerful competitive advantage. Technology advantage. Asian Paints invested heavily in technology long before competitors. The company knows which colors are selling, which city is growing, which dealers need inventory. This reduces wastage and improves efficiency. Economies of scale. Because of its size, raw materials are purchased cheaply. Manufacturing costs are lower. Advertising costs are spread across larger scales. This improves profitability. Financial strength. A great company must show great numbers. Revenue growth. Over long periods, Asian Paints have consistently grown sales. Growth comes from urban housing demand, rural consumption, premium paint products, repainting demand. Since FY21 to FY26, the revenue has grown from 21,000 crores to 35,000 crores, and the increase is 65%, which is a very big increase. Profitability. Asian Paints enjoys healthy margins compared to many manufacturing companies because paint is a branded product. Customers often choose quality over saving a small amount of money. The net profit has been increased from 3,000 crores in FY21 to 4,000 crores in FY26. That is, for the past 6 years, the increment has been 38%. Return on capital. One of the biggest strengths of Asian Paint is high return on capital. This means management converts invested money into profit efficiently. Why is this impressive? Because the average company gives ROC of 10 to 15%, whereas a good company ROC is 15 to 20%. Excellent company is 20 to 25%. The ROC of Asian Paints has been between 25 to 35%, which is very good. A high ROC is one reason Asian Paints became a long-term wealth creator. Dividend. Asian Paints have rewarded shareholders with regular dividends. This reflects strong cash generation. Dividend in FY21 was 14 to 15 rupees, whereas in FY26 it has increased to 27.5 rupees. That is 85% increase in dividend in the past 6 years. Despite the biggest competitive challenge in decades, Asian Paints generated over 35,000 crores in revenue and 4,300 crores in profit in FY26. Revenue is up 65% and profit are up 38% compared to FY21, proving that the company remains one of India's strongest wealth compounding businesses. Industry opportunity. India's paint industry still has significant growth potential because as income increases, People spend more on better homes, renovation, premium paints. Urbanization, millions of Indians are moving to cities. Every new home requires paint. Housing growth, government housing initiatives and private real estate growth supports paint demand. Premiumization, consumers increasingly buy washable paints, luxury finishes, waterproof coatings. Premium products generate higher returns. Competition, earlier Asian Paints dominated comfortably. Now competition has intensified. Major competitors include Berger Paints, Kansai Nerolac, Akzo Nobel India. The biggest threat is Birla Opus. The Aditya Birla Group has entered the paint business aggressively. They are building large capacities, expanding dealer networks, spending heavily on branding. This is the biggest challenge Asian Paints has faced in years. Why stock has underperformed recently? Many investors wonder why the stock hasn't performed as strongly. Reason 1 is competition. The market fears loss of market share. Reason 2, slower growth. Growth rates have moderated compared to earlier years. Reason 3, valuation compression. Asian Paints has often traded at a price to earning ratio P ratio between 35 to 90. Below 35 it is very cheap. 35 to 45 it is cheap. At P of 45 to 55 it is fair value. At a P of 55 to 70 it is expensive, and at a P of 70 to 90 it is very expensive. At current price of 2550 the PE stands at 60, so which makes it expensive. A great business bought at a very high valuation can still give mediocre returns. For Asian Paints, the key question is not is it a great company? The key question is, am I buying this great company at a reasonable valuation? Reason 4, raw material volatility. Crude oil derivatives are major inputs. Higher input cost can pressure margins. Management quality. One reason investors trust Asian Paints is management execution. Over the decades, the company has expanded carefully, maintained profitability, avoided reckless diversification, focused on long-term value creation. Consistency is rare in business. Asian Paints have demonstrated it repeatedly. Risk. Every investment has risk. Risk 1, market share loss to Birla Opus. Risk 2, raw material inflation. Risk 3, housing slowdown. Risk 4, increasing competition leading to lower margins. Risk 5, long periods of slow growth. Asian Paints is not just a paint company, it is a brand, distribution machine, technology platform, and cash generating compounder. The stock may face short-term challenges due to competition and valuation concerns. But if the company successfully defends its market leadership, it can continue creating wealth over long time. For long-term investors, the biggest question is not whether Asian Paints is a good business. The real question is, at what valuations are you buying this wonderful business?